Good afternoon. This is Martina Colombo, student of the Bachelor in Marketing at the London School of Design and Marketing. And today I'm going to present the Integrated Marketing Mix report focusing on the case of Netflix in the US market. So running very quickly through the agenda of the current presentation, I'm going to kick off with an introduction on the reasons why Netflix has been picked for the purpose of this report, followed by a quick brand characterization together with the analysis of the key geographical territory for the brand, so in this case, the domestic market, the American one. And then there will be a presentation of the key target segment for the brand through the STP approach, and the definition of the SMART strategic goal for the brand to be implemented and attained in the near future. A quick overview of the marketing mix with respect to the 4 Ps of product, price, placement, and promotion will then be presented in order to develop an ad hoc action plan and budgeting proposal. Everything will then be summed up in the conclusions. So why Netflix? Netflix is the leader when it comes to the entertainment services industry, both in the US market and across 190 other regions. The company has registered outstanding performance in the second quarter of 2022 with around 8 billion global revenues, and it has picked the number of subscribers up to 221 million in the end of fiscal 2021. However, this positive trend that has characterized the last decade of the company history has been abruptly interrupted in March 2022 with the loss of an important portion of the subscribers, especially in the US market. 1.3 million American households decided to withdraw the services of the Netflix platform. This is due to a numerous series of factors. For instance, the fact that the US market is extremely high saturated, there is a heated level of competitiveness, and also the fact that the company has raised up the prices of the subscription tiers in a moment where the inflation was soaring as well. So, of course, this was an unlucky move to try and raise the company's revenues that didn't meet the consumer's preference. So, Netflix is the right company for these analysis because it's in serious need for a change, for a new direction in terms of strategy, and with the first and primary objective to restore the consumer space, especially when it comes to the domestic market to the US. But given the fact that Netflix is a global company, it must be flagged out that it would be important for the brand to implement simultaneously similar actions across the key strategic markets at the very least, as well as considering the exploration of new markets where the growth would be strategical and that are still unexplored. My first thought in this sense would be China. When it comes to the brand characterization, so we have decided to put here this quote by Reed Hastings, who is the brand's co-founder and the current CEO, as it gives important insight on the so-called constructive paranoia, which is extremely well rooted in the brand's DNA. In fact, at Netflix, in terms of brands and company philosophy, there's this positive and constructive obsession about what's coming next, what's the next step, that it's very important when it comes to a moment, a parenthesis of a structural change as the one that we are describing now, as it speaks a lot about the ability of the brand to interpret the new zeitgeist and try to adapt to it, trying to, let's say, foresee the change, the upcoming change with strong business acumen, and also being able to adapt to it and implement a new transformational strategy with risk-taking approach. So together with this characteristic of positive paranoia about the next step in the company's history, there's also the fact that Netflix is extremely knowledgeable about its consumer space behaviors and interests. This is due to the fact that the brands always collect consumers' data, So it has great visibility on, let's say, all the patterns, the behavioral patterns that are characteristic of the watching experience of its consumers. And this brought to the opportunity of defining, let's say, identifying these new behaviors and owning them with new labels, with new names for them, like binge watching culture or the Netflix and chill moment, or the fear of missing out, the hate for spoilers, or all these moments that were already in the behavioral patterns of the consumers were identified in a very clever way by people at Netflix, by the marketeers in the company, and they became the assets, the ownable assets of the brand that are still leveraged in the promotional strategy of the company. At the same time, the consumer's data allow the brand to, let's say, engineer ad hoc contents in terms of product strategy in the marketing mix and make sure that they will be successful because they are based on all those elements that were already appreciated by the consumers in previous in their viewing history in previous titles from licensed third party suppliers or from the brand itself. With respect to the geographical territory, as we already said, the US market is the most significant area. Together with Canada, they all make the North American region. That is the main one for the market, with a penetration of 55% in 2019 and a number of subscribers that reached up to 73 million in 2021. It's important to say that the key driver for both the consumer's choice, so when it comes to prospect, but also for consumers' retention in this region, is the availability of exclusive original contents from Netflix. So the so-called Netflix originals are the main reason why people decide to subscribe to the platform's services. In terms of target, it's important to say that Netflix no longer engages in geographic segmentation, which means basically that all over the world, the same library of contents is available, at least when it comes to the most strategic titles. Conversely, this demographic segmentation is implemented, especially when it comes to, let's say, the identification of the main target among millennial and senior consumers, and the consumption among these kind of segment. It's pretty similar. Let's say it's seamless. Also, with respect to the different ethnic group in the American region. However, the most significant variables are the behavioral and psychographic ones, as they provide again, they are the basis of those consumers' data that were mentioned before, and they allow the brand to make ad hoc recommendation based on AI, machine learning technologies. So on a daily basis, there's the algorithm, and Netflix can identify the previews viewing habits and the moments where the consumers prefer to watch specific contents or its interests, and therefore make ad hoc suggestions. In terms of positioning, the brand leverages on 5 reasons to believe, which are convenience, compatibility, fair pricing, customization, and high quality. It is interesting to see with respect to the two other main competitors in the American market, so Amazon Prime Video and Disney Plus, which is the positioning in a nutshell, let's say, of these brands. So when it comes to Netflix, it is the leading high quality streaming network, both in terms of the experience, consumer experience that the brand's services allow, and also in terms of the quality of the contents that are provided. At the same time, Amazon Prime Video is positioned as a full range streaming entertainment service. So the platform is a little bit more omnivorous with a wide array of licensed third party contents. And Disney Plus leverages mainly on the unmatchable brand recognition, and also on all the exclusive contents that are part of the of its library of classics. This perceptual map represents where Netflix is positioned in the mind of the consumer. So we can see on the vertical axis of the graph that basically there, in terms of pricing strategy, Netflix do not engage in price wars. So it's not driven by the lowest possible price, but it's more about value-based pricing strategy. So the so-called fair pricing. In terms of content strategy, as we have said, there's a range, let's say, from the timeless classics that are the proprietary positioning of Disney till the personalized original contents, which are much more into the strategic approach of Netflix. Now we come to the core of this presentation. So, smart objectives definition. As we said, the goal for the brand in the upcoming future should be to restore and possibly increase the domestic number of subscribers, and specifically to increase the domestic customer base up to 2 million new active subscribers by the end of 2023. This goal is measurable, yes, for sure, because the company can easily quantify the number of new subscription. Of course, it would be better for Netflix to acquire the so-called qualitative subscribers, so the completers, those that are going to watch till the very end or almost a TV series, a TV content in general, because these are the easier to be retained customers. They are the most loyal and the ones that are more likely to continuously pay the monthly subscription fee. Attainable. Yes, the objective is attainable. We also need to consider that 2 million subscribers in the US market in one quarter, the last quarter of 2022, and all fiscal year 2023. It's an ambitious objective, but it's not. But it's highly realistic as well. It's attainable because the barriers that and there are at the moment in the US market are very specific and easy to identify. One of them is the fact that there is this practice of password sharing, and this is affecting especially the North American area. And of course, it's reducing the penetration rate of the brand in the region. So this should be limited or stopped. On the other hand, there's also the fact that, as we saw in the analysis of the pricing strategy for the brand before, basically Netflix is one of the most expensive offer in the entertainment SVOD market. So there should be perhaps a new tier, less expensive one, so something that comes below the standard offer that could cater the need of price sensitive kind of target, and also that replies to those previous customers that decided to withdraw the service due to price and costs reasons. In terms of being realistic, the SVOD market in revenues in the US have constantly grown in the past years, and they are expecting to maintain the positive trend despite this moment of temporary crisis. And especially when it comes to Netflix, also in comparison to the heated competition, basically the results that the companies registering are still the most positive ones. So both in terms of reputations, in terms of revenues, in terms of market penetration. So it's possible to expect and realistic to expect that by the end of the next fiscal year, the situation will be pretty much the same. Timely, as we said at the very beginning, this should be attained by the end of fiscal 2023. In terms of marketing mix, so an overview of the 4 Ps when it comes to the product marketing mix strategy will follow. Product strategy we already defined, which is the most important differentiation point for Netflix, which is the investment in the Netflix original contents. And moreover, the company has decided to try and stretch the product portfolio, adding a new line, which is all about the gaming offering, in order to woo a new target audience. So the product portfolio at Netflix now now encompasses a library of 17,000 titles that are globally available, as we said before, as there is no more geographical kind of segmentation. Of these 17,000 titles, 40% are original contents, and they are classified into two product lines: TVs and movies. When it comes to the differentiation between actual product and augmented product, basically it's a matter of specific features. So, for instance, the number of screens that can be connected to on a same account at the same time, or the quality on which the specific video can be seen, if SD or HD or Ultra HD. So it's about these kind of very specific nuances. Pricing strategy. As we said, Netflix pricing strategy is based on a subscription model and centered on value. So there's no approach in terms of the lowest possible price, but pricing strategy that is divided on three different levels and of subscriptions or tiers, and that is defined based on the specific features of each subscription plan. Moreover, yeah, in order to, let's say, make this smart goal that we defined of increasing the subscription base more attainable and realistic, it would be ideal to introduce a new cheaper tier into these subscription plan and offers, and especially the recent deal with Microsoft that is aiming to introduce an advertising supporting version of this plan goes towards that direction. In terms of placement strategy, so Netflix streaming services are accessible via web browsers, application softwares for iOS and Androids, smart TVs, video game consoles, and virtual reality handsets. Promotion strategy. This is very interesting because the brand basically adopts a twofold kind of approach. On one end, there is the significant investment on institutional global campaign that are developed based on a IMC approach that goes through the whole funnel. So it involves investment on awareness, above the line media mix, like including TV and billboards and on-site kind of PR stunts and activities, and then the lower funnel kind of media investments to further engage the consumer base, so digitally driven, for instance, with display ads and video strategy contents. On the other end, there's the investment on vertical productions, so on the promotion of original content that is generally developed on a very limited time frame, just 2 weeks. And in this case, the media mix is less, let's say, important, less consistent. So it's more about PR, intrinsically newsworthy kind of activation, and digitally led marketing activity that can be targeted to a specific slice of the population. Based on everything that we have presented before, we have developed this action plan that is based on 5 sub-objectives, and all of them, of course, aim to make possible and realize the SMART goal that we have identified before. So the possibility to increase the number of the subscribers in the domestic markets up to 2 million new subscribers by the end of 2023. Specifically, the objectives that are the part of this action plan are part of 3 of the 4 P's of the marketing mix. So the two that are presented here are about the P of product. And specifically, the first objective is to increase the number of original productions up to 50% of the total catalog. As we said before, at the moment, the Netflix portfolio includes 40% of its titles that are original productions, so this percentage should slightly change by the end of fiscal 2023. The actions to do so could be, for instance, leveraging on existing as successful franchise to develop new seasons and retain the audience. And this because in general, what happens with the brand, with Netflix, is that they develop an original production. It lasts for one season to maximum, and then it's dropped. The drop rate is very, very high. Also, in comparison to Disney Plus, that has kind of the same percentage. We're talking 11% for Netflix versus 9% for Disney Plus. So this should be, let's say, inverted as a tendency, because if there is a potential and fertile narrative, it should be capitalized on and exploit as much as possible. In a sense, same direction goes the second action, which is all about trying to select and invest on highly potential local to global content. There's no geographic segmentation anymore, so this is very important because it allows economy of scales, like in the case of Squid Game. And then the possibility to leverage on existing deals with specific production houses, especially from Hollywood, or specific directors, in order to again try to exploit already put in place contracts and agreements. All this part is the responsibility of the product manager, the production manager, and the trade manager when third party suppliers are involved. It's it talks more about B2B target because it's in the production phase of the supply chain, let's say. And calendar wise, we are talking all fiscal 2022 2023. And of course, there should be a monitoring plan and also a contingency plan in the case the contents are not successful. So, monitoring should be based on a specific set of KPIs like total customers watching, the total hours viewed, the conversion rate, and the contingency plan should be put um, in place after 1 year from the launch of the new content. Budgeting. Budget wise, all the estimates are based on global figures, and this because there's no way to have a specific and clear disclosure on the numbers of a specific region. So, for instance, only the North American market, or more specifically, again, the US market. Moreover, the fact that there is no segmentation on a geographic base means that the contents that are developed centrally by the brand are then used and widespread among the different geographies. So the source for money shouldn't be a specific pocket, but it should be centralized. Budgeting wise, 50% of the total yearly budget should be invested on this specific pillar. So we're talking based on the investors' forecast, we're talking 70.5 billion US dollars. The second action, based on the PO of product, is the consolidation and stretch of the Netflix gaming's offer. So in this case, there are three course of actions, let's say. First of all, trying to acquire local successful businesses in the gaming market to easily assimilate the needed expertise. And it's because we are talking about a target, the gamers, one that is extremely skillful and knowledgeable. So it's important that Netflix, and this brings us to the second action, develops a qualitative offering. Otherwise, they are going to lose credibility very, very easily in this specific niche market. So there should be the licensing of qualitative video games. Also, they could be based on Netflix original content to create a consistent offer. And then, of course, hire personnel with specific background in gaming, always for the same reasons. So the responsibles, in this case, are product managers, trade managers, and HR manager. Again, B2B target mainly. The calendar is pretty much the same, apart from the acquisition of local successful businesses that should be anticipated as much as possible. The KPIs are more specific on the gaming side of the business, so the number of unique users, the average using peak hours, the ARPU, the lifetime value, and the retention rate, together with the churn rate after 1 year from the launch. Contingency plan, so in case on a year-to-year assessment there are still, let's say, not highly qualitative results, then the brand should evaluate either to go back to the development phase of some specific assets, or to invest more in the promotion of the most strategic titles, for instance. But the KPIs should be, and the performance, the return on investment should be considered differently, as this is just a niche offer within the wider product portfolio of the brand. Budgeting wise, again, the figures are based on a global perspective. So 10% of the total global yearly budget, and we are talking 3.5 billion, should be invested in acquiring the third party studios independent, possibly. 8% of the total yearly budget are meant for the licensing and the production of the new video games, and then around 10 million for hiring the specific personnel around the different geographies. The rest of the plan is based on the other piece of the marketing mix, especially on the promotion. So the first sub-objective here presented is about promoting what we have discussed in terms of the original productions that are going to be put in place as part of the PO product. So generate awareness on the new original contents, increasing the communication window of the most strategic productions up to 1 month. In this case, there are different actions that are all about, let's say, deciding the perfect marketing mix. So develop ad hoc vertical campaigns with video strategy, TV commercial, and selected MVPDs channel, or develop ad hoc trailers based on the specific target audience, and develop newsworthy local launches through PR-driven activations. In this case, the responsible is the communication manager, media manager, the partner creative agency, media agency, and the PR specifically skilled agency and manager within the company. The target could be mass consumer when it comes to the ATL awareness campaign, and then, of course, some more specific and targeted audience when it comes to the trailers and the lower part of the funnel. KPIs are very specific of each media touch point that is going to be used and selected within the marketing mix. So for TV, for instance, we're talking mainly GRP and reach. For digital video ads, we're talking reach, impressions, CTR, and so on and so forth. The second objective here presented is about promoting the gaming offering. So in a very similar way to what we have just discussed for the video contents. So in this case, as it is a niche product, a niche part of within the brand's product portfolio, it would be better to develop a digitally led campaign with, let's say, targeted programmatic content. They could be lower funnel ADVs, or also video strategy with a more with a longer format and longer communication messages. Responsible are very similar to what we have just discussed, and in terms of KPIs, we have the same approach. So so basically they are set based on the specific media mix that is going to be picked. Lastly, there's a final point that is, let's say, interlinked between the P of promotion and the P of pricing, and it's about the launch of this new tier for the price-sensitive target audience. So in this case, it's very important to develop lower funnel ADVs and video strategy contents that are just meant to be for these kind of prospects and previous customers, because the company doesn't want to alienate those consumers that are already willing to pay full price for premium, standards, or basic tiers. In terms of budgeting, all these offerings are under the promotion budget, which should be around 8% of the total global yearly budget. So conclusions. Everything that has been described here, it's here recapped. So the SMART objective, again, is increasing the US consumer base up to 2 million active subscribers within the end of fiscal 2023. The actions that are related to this SMART objective are divided into the three P's of the marketing mix: product, pricing, and promotion. Product-wise, there should be a continued investment on the Netflix Originals offering. In terms of gaming, there could be further stretch of the product portfolio in order to increase the offering here and make it even more qualitative. Pricing, it's important to introduce this cheaper tier to cater a new segment of the population that is more price sensitive and that now can be willing to pay less and have a different subscription plan with another competitor. And then promotion. So promotion wise, there are different actions both to give visibility to the Netflix original production when it comes to the main product line of the product portfolio, to the gaming offering, and also to this tactical, let's say, change in the pricing strategy. Thank you for your attention. This was the Integrated Marketing Mix report, and have a lovely evening.